Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Wednesday, May 27th, about 4:30, and this is your end of day recap. So, everything in the video that we're going to be talking about is for information purposes only, not giving out any advice or recommendations, anything like that. But pretty crazy day overall, and I think if you've been trading for a while, you know that there's a lot of lessons that can be learned. I think this is one of those days. So I'll explain in a minute about lessons to be learned. But theme of the day was a little bit of morning selling, particularly in that growth area this morning. Kind of brought out some dip buyers and really, really quickly. So it kind of just tells you what kind of environment that we're in right now. It seems like a day and a half of the growth names going down and this rotation into value. Well, the value names still did very well today. You could see on your left, some of the best performing names were steel names today, metals and mining, banks, home builders, even the gold miners came back. They were one of the worst performing groups in the beginning of the day. They came back. The banks charged ahead for the second day in a row. So did those home builders. So again, a lot of value, was just kind of was very strong throughout the day. Even when Nasdaq was selling off, a lot of these groups pretty much it was a very small dip in some of these names. They held in pretty tight, and that can tell you that there is just not a lot of there wasn't a lot of selling there. The selling was more in Nasdaq and growth names today. So, number one, I think that this market is really resilient right now because all it takes is, a day and a half of a little bit of selling in some of the growth names, and then all of a sudden buyers are come out. So so again, I think that's great. I think that we don't normally see something like this, right, where we get a couple hours of volatility and then all of a sudden we charge back. Right? And if you look at the Nasdaq, what was interesting this morning was you could tell that somebody had some selling to do because sometimes they'll give you a little bit of a heads up. This was going on, all morning or all overnight session. The Nasdaq was up about over 1%. And then we started to see some leaking here, like around about a half hour, 45 minutes before the open. Something like this, a big red bar. Usually somebody's onto something. Somebody knows that there's a big order that's coming. So sometimes you can kind of front run that yourself a little bit too, if you become aware of that. Where these things don't happen by accident. Usually somebody knows that somebody's going to be dumping some stock for the day. So let's talk about this portion of the day first. If you listened to my video yesterday, I was saying that this is probably coming. That some type of volatility was due. Because remember, everybody who's bought all in here, at some point, they're going to start to unload some of those positions and take profits. So I think something like this, at this point, now that we've made the run that we've made, is definitely, we probably will see more of this type of thing. I'm guessing. Because I think more and more people will be, who have loaded up and put positions on, around a month ago to 6 weeks ago, they're going to be unloading and taking some profits. And then what happens is the high frequency guys get a whiff of that there's a seller in the market, and then they try to front run the order, and that's why it becomes as dramatic as it does right now. Okay, so that's a little bit of my theory and about why we may be seeing this again. So I had sent out a member video, and if you're a member and you've already listened to this is going to be a little bit redundant. But if you got caught in this morning, and it hurt a lot, right? Your P&L was down a lot. There's a couple of takeaways from this, and I know a lot of you trade options, and there's a tendency with newer, younger traders is that they tend to hold too many short-term option positions, right? I've seen some portfolios of newer traders, and they've got a portfolio of short-term options on. So that's all fine and dandy when the market is going up and you're positioned long. But if we get a couple of these things, and even like you can't even see this on the chart. right? So if we get like a sustained move 2 or 3 days, what happens is all of those positions basically get wiped out if you're positioned long. It's the equivalent if you've been to a casino. I like to use sports analogies. Every once in a while, I'll use a little bit of a casino analogy because really, if you're trading a lot of short-term options, it's kind of like a little bit of gambling if you're doing it too much. So, an analogy would be if you're either playing, if you're on the craps table, and if you don't know the craps rules, or at a roulette table, and you're loading up all your bets on one spin of the roulette wheel or one throw of the dice, and someone either craps out or let's say you're positioned and whatever in the roulette table on a bunch of different numbers and like 00 comes up, all that money comes off the table. Just be mindful of that, because again, I think there's a lot of people that were feeling it this morning in terms of a lot of growth names getting hit in the first 2 hours of the day. I didn't think it was that big of a deal. I think it's quite normal. Another thing to remember is that the market does from time to time go down as well as go up. So you have to kind of be aware that's how the market is supposed to act. Sometimes it goes up, sometimes it goes down. Over time, it usually goes up, but there should be days where it does go down, right? That's the mechanism of how this usually works. But just keep in mind, so there's a few things that I will give you as takeaways from this. Now, you may choose to listen to this or you may not, and you may be comfortable with those P&L swings. I for one am not. I don't like to have that happen to me where there's a little bit of red on the tape and all of a sudden you're down a lot of money. So, a couple things. At this point in the market, now that we've been on a very, very big swing and it's probably mature in the move that we've made, I talked about that in yesterday's video, so I won't rehash all of that. But if you're going to traffic in short-term options, keep your position size small. Unwind a bunch of them at the close. Do not let these things accumulate, because you will be hit once the market does not go exactly your way. So again, quantity of positions is a big thing. Try not to have too many of these things on. And also the size, right? Scale down your position size. So again, this is something that we've been talking about now for the last couple of weeks as sentiment has gotten hotter and hotter. Now again, I'm just talking about short-term option positions. I think some of you as well have a tendency to not use all the tools that are in the toolbox. You don't have to trade short-term options, right? You could have a couple like leap positions on. You could also have stock on, right? I do that a lot too, because I think stock, believe it or not, is a little bit less. It's a little bit safer to me because I know where I can get in and out with a stop price. It's also not as volatile. Right? When you're dealing with an option position that's short term, it's either going to go up or down, usually in pretty big, because you have that leverage. So anyway, so that's a couple things, and I mention this because again, I'm trying to help. That's what I'm here to do. A lot of times is, especially like in the trading room, I want to make sure that newer traders can try to avoid some of the pitfalls that I think a lot of traders it happens to, right? I think what happens to some newer traders too is sometimes, you'll be making a decent amount every day as the market is grinding higher and doing its thing, and then all of a sudden you're hit with some volatility and you just wipe out a couple weeks of P&L. So again, you should be doing things to manage that situation. So just because the market goes down, you don't get wiped out. Also, I haven't even talked about hedging, but you could put on a couple hedges too that will minimize that a little bit where you're exposed. So for example, if you're in a bunch of software names and a bunch of FANG names, then SPY puts are probably not going to be the best thing for you to do. You should be buying Qs puts, right? Because that matches what you're doing. Or one of the software ETFs. You should be buying puts in that, right? Because that's where your exposure is. So again, you have to match your hedge with what your exposure is. But that's something to do. But overall, I think as the market continues to grind higher, and the sentiment gets hotter and hotter as it's been getting, It's a death wish to be holding a lot of front month options, because you're increasing the odds when the sentiment is running this hot. You're increasing the odds that that there are going to be profit takers and a little bit of a dip in the market. So definitely there's things to do. One trade, another example that I tried to do, even though I got caught in a trade. I got caught actually in a couple trades, but that's okay. I got caught in this VRTX that I started. So again, I like to give real examples rather than BS that you see on Twitter. But this was something that, hey, I was actually looking for this thing, little consolidation for this thing to break out. Now, Vertex, I think is a pretty quality name. But when I originally got into this position, notice I said I'm just starting a few of the July 300 calls. Now, this is not a long-term option play, but it's not super short-term either. It's not a weekly, it's not front month, it's July. I've got some time with it. But to give you an example how volatile things can change pretty quickly, this was put on at the end of the day on Friday at 1060. Now, VRTX got hit again yesterday, and I averaged down a little bit at 560. Why? Because I think it's a quality name. I didn't see that it basically closed on the absolute lows. So if I had known that it closed on the absolute lows, maybe I wouldn't have added at that price. Hindsight 2020. And then what I did was I added one more time today. So now I've reduced my cost basis, all the way from $10, and I added today at 278, with still a chance that this thing could come back for me. And because Vertex, again, I think is a very strong name. And you could see it had a really nice reversal. So I brought my average cost basis down to about $5, and I was able at the end of the day to take some off for profits. So the reason why that was able to work out for me is because I'm doing what I just talked about. I'm participating a little bit in this market, even though I think the sentiment is really hot. But I'm leaving myself plenty of room on basically any position that I start. I'm not going in on a half position. I'm not going in on a full position. Right now, because the market sentiment is so hot, I'm going in right now at like a tenth of a position just to participate. And then I can manage it, right? The other thing is very important as well. If you're positioned correctly, and I've said this over and over and over, when the market does something like this, and you start to see, call buying like we did today, and a bunch of different names into the weakness, I can fully capitalize on this dip and go to work, excuse me, and take advantage of it by adding some new positions. Now is ServiceNow is another name that I always go into when the market dips a little bit, as well as things like Microsoft. But you could see how many things I was doing today. We saw some Facebook calls. They were buying the dip in that one. Netflix was a real nice trade, even though I didn't stick in this trade throughout the day. But I just thought Netflix. How many days was this thing going to be down in a row? Wow! And look at the move in this. Right, so we had one red candle, 2, 3, 4, 5, and it was day 6. So I was like, all right, I didn't see any major call buying or anything like that. I just said, hey, this is day 6 of Netflix being down. It's due for a day to rebound, and it actually finished up 1.2% for the day. But the reason why I'm talking about this is, and these different plays that I put on, is it gets a lot more exciting when you're in the right position to capitalize. If you've got too many positions on and you're like, oh geez, I'm down, I really got caught in this, what do I do? You're missing out on all of the rebound trades. So again, the only way for you to do that is to manage your positions and not load up at the wrong time. So again, it takes a little bit of experience, but because again, these dips, when they're just as minor as they were today, can be very, very rewarding if you have a somewhat clean slate. And that's kind of how my approach to today was. Again, and I came in with some positions, but again, I'm really trying to be cognizant of the run that we've been on because I think if we do get another market dip, you could see. I mean, it was only one day where these software names took a break, and you saw buyers come right back in. Look at the hammer bar on ServiceNow. I did not play. This is one name I did not. Not ServiceNow. I'm thinking of Shop, but same thing. Before I go to Shopify, which excuse me, ServiceNow I traded today. Shopify I did not. At the end of the day, sometimes if it's been a long day, I tend to mess up some terms and whatnot. But look at the hammer in Shopify today. It came all the way back. Now it still is down 2.3% on the day, but look at the opportunity it gave you. And a couple of things that I thought were quite interesting is, break into value. And you could have played this. There were some traders who were playing this on the short side today too, because it is elevator down when you get this and stairs or escalator up. But look at where we found the support, right at the bottom of value. Facebook was one of the first things that I bought today, because look at where this thing fell into, right into support, right at the bottom of value. A couple other names, just so that I'm talking about some trade ideas too. But again, trade ideas are great and everything, but it's really what's going to make you do very well in this game is how you're positioning yourself and the trade management side. So again, I know everybody likes trade ideas and so forth. I do too, and I like to look for new trade ideas and so forth. But I'm telling you, the management and basically how you're managing the risk is going to be so much more important than the trade ideas. DXCM is another name that I've had my eye on for a while. Look at the Virgin point of control that was taken out. Now there is one that lives lower here, but if you look at the daily chart, this also took out, came back to the top of value support as well. So, you're starting to see some of these things that may have sold off a little bit too much, a little bit of extreme, and that's where I want to come in and play and trade some things. All right, so that's the end of today's recap. Let's see, was there anything else that I wanted to talk about? There's a couple other things that this is another example too. This morning pre-market, I actually bought some of this, and when the overall market rolled over, this thing started to roll over too. But again, leaving yourself plenty of places to add to your position so that you could take advantage of the dip. Right? So I added to my starter at 33 bucks, originally 35. Now I've got a cost basis around 34, and the stock, I managed to take a profit on doing that. But again, leaving yourself plenty of being very flexible, leaving yourself plenty of room can also make the difference. And by the way, some nice performance after the close today. And Workday, Autodesk actually gave it back, but nice move from Workday. All right, guys, that's it for today's video. I hope this helps. Again, I try to provide some management because I think it's important, and more than just a few trade ideas in these videos. Have a great night, everybody. See you tomorrow.